So we want an instant audit on this one. Let's go to Matt McCall of Penn Financial Group and Ron DeVaria of NewOak Capital. The casual dining chains, there was some misses, but still profits at the end of the day. The casual dining chains, which really sort of struggled during the recession, while McDonald's and Burger King did very well, we're starting to see the consumer that's coming back in some other ways. They're starting to go dine out more. A good sign for the consumer?
It's a good sign, and I think this follows, obviously the fourth quarter consumer growth, and it should, we should have had these good numbers, and it looks like it's both top-line growth as well as maintaining a good bottom line.
So a good sign that folks are heading out to eat, Matt?
Yeah, it's the middle. I mean, you have the lower end, which is the McDonald's, the Burger Kings, and you have the middle, which is maybe Cheesecake Factory, Buffalo Wild Wings. Then you have the higher end, the more expensive restaurants. So what we've seen over the last few months is people moving up from the McDonald's back to the middle where they've been. And this is a good sign for middle class, because this is, where the middle class goes on a Friday night, get some wings and some beers and whatever they eat, I guess, there. But
some wings. Yeah.
Well, but a big question, though, pertains to the stocks, Matt. And I'll go to you on this. Some of the stock prices of these casual dining chains have seen double-digit increases. I mean, even this year, some of them. Panera's doing very, very well. Darden Restaurants, Olive Garden, the operator of Olive Garden, they've seen their stocks go up exponentially. Can that continue?
Well, that's why we see them down right now.
Panera Bread, you can see.
Yeah, I mean, Cheesecake Factory, since the beginning of last year, up 125%.
There you go.
Domino Pizza, 140. P.F. Chang's, 97. Buffalo Wild Wings, 90%. I mean, a lot of these stocks have doubled over the last 14 months. They've priced in a recovery. So where do you go from here? Probably sideways for a while. Would not be buying into these stocks right now. And that's why they're falling, because they did not come out and raise guidance. The numbers aren't bad, but when you rally 100% a year, you have to raise guidance. You need to keep up with that.
But then again, Ron, there's a lot of folks that are still, pinching pennies. They're still holding back from going out. So potentially we could start to see more. And there's that trade-up effect that a lot of analysts have been writing about, that those folks that have been cooking at home or being very conservative, if they're going to go out to eat, it might not be the fanciest restaurant in town, but at least they can go to a Panera and get a hot sandwich and a nice bowl of soup.
Absolutely. I think
maybe not the beer and the Wild Wings that Matt's talking about over here.
Why not? Why not? I think the middle is really where you need to focus, and that's where the economy is at, and that's going to very much an indicator of how we're going to do in terms of both the consumer and the growth and really the job. When the job market recovers, that's where you're going to expect. People are going to be busy. They're not going to be cooking at home. They're going to try to
once they're working.
Once they're working.
There are some individual stories with some of these companies. It's not just a consumer coming back story. But you mentioned the Cheesecake Factory. In fact, they're doing so well, and you talked about their stock being up 125% over the past year. But they're doing so well, they're now expanding. They're even opening new stores in this environment.
But that's good, because when you have a recessionary environment, you take advantage of a lot of other restaurants going out of business. So there's now places that they can move into where they could be the leader. I mean, what kind of restaurant has a 30-page menu, doesn't do well? I mean, if you can't find something at the Cheesecake Factory, where are you going to find something?
Not to mention the portions. You could eat for a week on one entree.
I was shocked. In California, they have to put the calories on,
really?
on the thing, and 1,800 calories for a slice of cheesecake. I don't know.
Did you eat it?
No.
Counting calories, that's no fun.
I wanted to.
All right, Matt, Ron, thank you guys very much for that. And moving on.
Instant audit on it. Matt McCall is with us this morning, as well as Ron DeVaria. What do you look for from retail, Matt?
We had some pretty weak numbers last month. We had negative 0.3, X-Autos negative 0.2, so we're going to probably see a pickup, according to the economists. But I'm concerned that they come in below expectations. And just doing on the chat here, asking people what they're spending, everybody seems to be spending less. I'm personally spending less for the first time in a while.
Yes.
Maybe not
on your clothes, your hair, but certainly in other ways.
Obviously, I didn't pay a lot for this haircut.
Everybody can pull back in their own ways, right? But you're concerned, seriously, people are cutting back.
I do. I think people are cutting back. People are still concerned about the economic recovery. Unemployment's still high.
Right, okay. The flip side of that is that maybe... And I don't know, sometimes people, and as we say, we have our chatters that are in every morning, and maybe they're saying that. Some people say one thing and do another. That's sometimes what we see in consumer numbers. Right. What do you think, Ron?
I think, from the numbers we're seeing from the stores, we just saw the casual dining numbers. I go the other way. I think the actual numbers are going to be okay. They're not going to be not great. They're just going to be okay. It's going to show that they're gradually improving, and that's what we really need at this point in time.
So you think? I mean, the basis for that is what? That the recovery is not off the charts, but it is a recovery. So and we kind of trend up.
5.6% GDP growth fourth quarter last year. We also, you're right. The last month's numbers were a disappointment, but we also seeing that for example, we ended up with a 9.7% unemployment rate as a surprise, but then we lost 20. So there's good news, bad news. There's a lot of.
Couldn't figure out. I think Matt, you may have been in that day. That jobs report really did add a lot of kind of uncertainty to the market because it was very hard to understand. I mean, and people we were talking about in the newsroom all day, and there were points of it that if you were bullish, Matt, you could have pulled out and said, well, this is pretty good news. The unemployment rate is coming down. So other people say, no, people are discouraged. That's why the unemployment rate's coming down. All this type of stuff and these cross currents of the revisions and the new adjustments. What do you make of where we are in the jobs market?
I think we're making progress. As Ron just said, as in retail sales, we're making progress. I think we're making progress as well in unemployment. The problem is those numbers, we could have ripped that apart for hours. Connell had great news, some bad news, very, very uncertain to where we're really going. But the bottom line is we are moving slowly, steadily, getting a bit better as far as unemployment, and that should roll over to retail. But back to retail for a moment. When it came out January numbers, same-store sales for individual companies, a lot of the higher-end companies did well. I think Nordstrom was up double digits. So this comes down to a stock picker's market, really, in my mind. There's going to be individual companies that take advantage of this, but there's going to be other companies that lag. And I think overall the number is going to struggle, but individual companies will do well.
Such as?
I think Nordstrom will do very well.
Higher end. Higher
end, I think Saks does well also. But then again, Macy's, I think, will struggle. That's a company I'd be shorting, actually.
All right, good enough, guys. Am I the only one who thinks Ron's sitting in a hole? Josh, I think Ron is. I feel like I'm looking down.
I'm just that big.
Don't you think? Is it it's the intimidation factor?
Right, that's what it is.
We're going to get you a bigger chair, a pillow to sit on, or something like that, right?
Listen, I just didn't do the green handshakes this morning.
I'm going to bring in one of my kids' booster seats tomorrow, and we'll just have them sit in that. All right, thank you, guys.
There you go.
We want to know what all you guys think.